Okay, so moving right along here. I guess I need a marker. Here we go. We're going to turn our attention, this thing's on, yeah, to business use of home and business bad debts. So business use of home, this is otherwise known as the home office deduction. So this is used for taxpayers who use their home or space in their home for their business purposes. Now, there are a couple of requirements first that that have to be met. The use has to be exclusive, regular, and for the business. So exclusive and regular are important. For the taxpayer's business, that's kind of implied because we're not going to take this deduction unless it's for our business. It means that if you are a W-2 employee, though, and you work from home, you do not get to deduct any of your expenses that you incur from working from home. So that it used to be that you would be able to do that. I had mentioned before there was this miscellaneous itemized deductions on the Schedule A. Under that category, individuals would be able to deduct business expenses even if they were a W-2 employee. Those business expenses had to exceed 2% of their adjusted gross income before they would be deductible. But it used to be before 2017 that they were deductible for individuals who were employees, for W-2 employees. But now that is no longer the case. So if you are an employee of another business, it's not your business, you're not self-employed or you don't own the company, you're just an employee and you work from home, now you do not get to deduct any of those expenses. So we're only talking really about individuals who have their own business. So this exclusive and regular means that exclusive means that the space that is used for the business purpose has to be used only for the business purpose. So it can't be like a multi-use space. So if you have a dining room and you use it as your home office, but then on Thanksgiving Day, maybe you don't even really use it very often as a place to eat, you just use it as your home office, but on Thanksgiving Day you invite your friends and your family over and you clear everything out and you make it into a place to have a family dinner, that means that that space is no longer exclusively used for the business. So it has to be exclusively used for a business. It doesn't have to be a separate room. It can be part of a room, but that part of the room has to be used exclusively for the business purposes. Also has to be used regularly. So on a continuous basis. So it's not just once in a while you use that space. It's on a continuous basis. You are using that space exclusively for business purposes. So, and that's important because a lot of times people will, or they'll, maybe not a dining room, but they'll use like a guest room. A guest bedroom will be their home office, but then when they have guests over, they'll actually use that room for somebody to stay in. Well, that then means that it is not exclusive use for the business. Okay, so those two factors have to be satisfied. Again, could just be part of a room. That's fine. It's always best to kind of partition it off somehow, but it can just be a part of that space. So it also, sometimes determining whether a place is a taxpayer's home, because this is a home office deduction, determining whether it's their home it can kind of, there can be some gray area there. One of the things that we would look at is the relative importance of the activities that are performed at the business location. So Is it, because sometimes people will have multiple business locations, so somebody will have a home office for their self-employed business, but then they'll have another office space as well somewhere else. Maybe they do administrative tasks at home, but they meet with clients somewhere else. Think, a counselor or a doctor or a dentist or something like that. So you have to consider what's the relative importance of the activities that are performed in that location, and what amount of time is spent at each business location. Business home use would include administrative or management activities if there's no other fixed location to conduct that business. So we've got an example here of Rob, self-employed insurance agent. He works exclusively from 2 rooms in his home. He rarely meets clients at his home. So that exclusive and that regular use would also include if it was a place where you actually meet with clients. That would kind of be that would fit the regular use definition. So here he's an insurance agent, works from 2 rooms in his home, but he doesn't really meet clients at his home because most of his client contact will occur over the phone or at the client's home or office. Even though most of Rob's client contact is not in his home, all of the administrative work is completed in the home office. Therefore, it would meet, and if they're only being used for that purpose, those rooms, then the rooms would qualify as a home office if they meet that regular definition. So they would also meet the exclusive, the requirements for it to be exclusive. This just mentioned what I mentioned earlier. Prior to 2018, an employee could deduct a home office if the use of the home was for the convenience of their employer. It eliminated that deduction. The 2017 tax law eliminated that deduction, and that is no longer an option. So if the space meets the exclusive and regular requirements to be classified as a home office, we have to then determine what that deduction is. What is it that we're deducting? What tax benefit are we getting through this deduction? The form that we use is a Form 8829. Okay, so now we got another form. All these forms that we have to kind of become familiar with. The Form 8829, and then it gets the information on this, so it goes here first, and then it gets transferred to the Schedule C. Now, if you recall, when we looked at the Schedule C earlier, I don't know if they give us a Schedule C here. No, they don't. But I had mentioned there, so it's like an income statement where we had the income items, cost of goods sold, all of that to get to our gross profit, and then we got all of those expenses listed to get to arrive at, I think it's line 31, a tentative profit or loss. I don't know, it might not be 31, it might be 29. The tentative profit or loss is before any home office deduction. The reason for that is that the home office deduction has limitations to it. Certain expenses within the home office deduction cannot bring your net income below 0. And so that's why we call it a tentative profit or loss at that point. And then we do the calculation for the home office because it does have that limitation to it. There are 2 areas, and I'll show you, I think we've got an 8829 up here. We have expenses that are direct expenses and we have indirect expenses. Direct expenses would be items that are 100% attributable to the space that's being used for the home office. So for example, you've got these, we'll use Rob, he's got these 2 rooms. If he had to replace the windows in those rooms, those would be 100%, the expense of that would be 100% attributable to that business space because it's not the whole house overall, it just has to do with the space that's being used for the home office, right? So that would be an example. An example of something that is an indirect expense would be property taxes. Property taxes, because now we have a property that's being used partially for personal purposes and partially for business purposes. So now we have to apportion out that indirect expense to how much of it is attributable to the business, how much of it is attributable to the personal space of the home itself. That would be an indirect expense. So we have those two types of expenses, direct and indirect, kind of like financial accounting when you're accounting for cost accounting and that. You've got some direct expenses and you've got overhead as well. So you can kind of think of those indirect expenses as more like overhead. The direct expenses are super easy. They're 100% attributable to the business, so they're 100% deductible for the home office deduction. So if he replaced the windows and it cost him $2,500, he would get a direct repairs expense of $2,500 for the home office deduction. Indirect expenses involve a little bit more calculation because we have to figure out what the business percentage is of the entire of the unit, the home, where we're using that space for business. So what we do is we use square footage. So to figure out the percentage, we would take, and this information goes on the Form 8829 right at the top as well. First thing we do is figure out what's our business use percentage. So if our total square footage is, let's say it's 2,000 square feet. So we've got 2,000 square feet in the entire house, and we have our business square footage. So the area that we are using exclusively and regularly for business is 500 square feet. Well, that is what, 1/4 or 25% business usage. So any indirect expenses that we have attributable to the entire building, so that property taxes, let's say our property taxes are what, $5,000 a year, we would take 25% of that, so $1,250 would be our home office deduction for property taxes. So we would get a deduction on the 8829 of that $1,250, 25%. So, but we're going to use the square footage, the total square footage, the proportion of our business square footage to our total square footage to determine what that percentage is. Now, I had mentioned that there is a limit to this deduction. Certain expenses attributable to the home office deduction cannot bring our net income below zero. Okay? Those home office expenses that would not otherwise be deductible, things like insurance, utilities, and depreciation. Think about, on that Schedule A, we have two categories of personal expenses that relate to our home that would be deductible. We have mortgage interest, right? We talked about that with the Schedule A, and we have property taxes. Those are items that would otherwise be deductible even if we didn't have a home office deduction. But there are certain deductions that we're going to get to take as a home office deduction. If we meet those requirements, there are certain deductions we're going to get to take that we wouldn't otherwise get to take, like insurance, homeowners insurance. Homeowners insurance is not deductible unless you have the home office deduction, and then a portion of that that insurance would be deductible. Utilities that you pay on your house, they're not deductible ordinarily unless you have a home office deduction. Same with depreciation. We don't ordinarily depreciate our personal property. The only time we would depreciate it is if we are taking the home office deduction. Okay, so that's what they mean here by those home office expenses that are not otherwise deductible. The only reason you're going to get to deduct them is because you qualify for this particular deduction. Those are the expenses that are limited to the gross income from the business use of the home. So meaning so we have to take these expenses when we do the 8829, when we fill it out, we take these expenses in a particular order. Okay, so we subtract those expenses. If we total up all of these expenses and now our net income is below zero, well, actually, we take the other expenses first, the mortgage interest and the property taxes first. If we take those and now our net income is below zero, then we're not going to get to take these other expenses. It's only going to be up to the point that we have zero net income that we can benefit from this. So let's take a look at how this works. We've got an extended problem here. Oh. Okay, so here's Rob, again, had those 2 rooms that we've determined he regularly and exclusively uses in his home office. So he had $19,000 of gross income from his trade or business. So we get that. Let's see, did they do the... So his gross income, total receipts that he had was $19,000. That's what's on the Schedule C on, I can't remember what line it is, but we get to the gross profit amount, and that's how much he has, $19,000. Then he has other expenses that are listed on that Schedule C. Maybe he paid, I don't know what expenses he would pay, advertising, maybe he had some contract labor, maybe he had some office expenses, that sort of thing. He had a total of $12,000 of expenses. So we get to his net income, so gross profit of $19,000, and then we have expenses of $12,000. So now we've got, this is his tentative profit of $7,000. That's, again, I can't remember if that's line 29 or line 31. I think it's line 29, actually. I think the final number is line 21 or 31. And then he had home office deduction. So he had expenses. He had real estate mortgage interest of $9,800, real estate taxes of $1,200, and this was for the whole year, for the whole building, okay, for the whole home. Utilities for the entire home of $1,500, insurance of $1,700, and then repairs of $2,000. I think we're going to assume those are direct expenses, directly related to the, well, maybe I shouldn't assume that. Well, they don't really tell us. Let's see, $4,900 taxes. Do we go into that? Let's see. Okay, so they are direct expenses. No, they're indirect. Sorry, it's in this column. So we have direct expenses on the left-hand side, indirect expenses on the right-hand side. So those repairs would have been to the entire house. Maybe he fixed the roof or something like that, which would apply to the entire house. So all of his expenses are indirect expenses. So the first thing that we get to do, oh, and then he also had depreciation. So he had got to depreciate the building. So the building basis of the home is $200,000. He uses it 50% for business. Let's see, did they tell us that somewhere here? Oh, maybe they told us up here. Oh, I missed this example. The five-room home that he has is 300 square feet. The 2 rooms used exclusively for business are 750 square feet each. So add those two together, 1,500, that's 50% of the total square footage of the house. So his business usage is 3,000 divided by, 1,500. So take our 3,000 divided by 1,500 is 50%. So there's our business usage there. Sorry, I skipped over that example when I was doing this. So that's where we're getting so the depreciation, what we would take, this is a residential property. So he gets to take, if you look at the table there for the 27.5-year property, if we looked at the table, the percentage for the year would be 2.461% of depreciation, but we're only going to depreciate half of it, right? Because that's our business usage there. So 50% for business. So that's how they get this 2461. 200,000 basis, half of that used for business, multiplied by the annual, the percentage that is on the table, the correct table. So that's where they get the 2461 number. So what we would do, first thing we do, as they did here, so 19 minus the 1,200 to get our tentative profit of $7,000. They didn't do a tentative profit here, but the next thing that we get to deduct are these items that would otherwise be deductible. So these are things that would show up on the Schedule A. If he uses a Schedule A, he gets to take his interest expense and his taxes, but we're going to take the business portion of those expenses first on this for the home office deduction. So remember, the interest was $9,800 total times 50%, which is his business usage percentage. So we're going to subtract 4,900 here, and then we're going to take his mortgage. Oh, not mortgage. Sorry, property taxes. I already have the mortgage interest there, which is 1,200 times 50%. So we get to subtract 600 here. So we've got, what is that, 5,500, so 1,500. Now we are limited with the rest of those deductions. Remember, we still have repairs, we still have insurance, we still have utilities, we still have depreciation, but we are limited to $1,500 because right now this is his profit. We can't go below zero with this. We can take these and we could go below zero, but we can't go, once we get to this point, we can't go below zero. So even though 1/2 of the utilities, insurance, and all of those are home office, they're deductible for the home office, they're limited in total to $1,500. That excess amount, any additional amount then that's left over, gets to be carried over to future years until it's absorbed. Maybe it'll be absorbed, maybe it won't. If he makes a whole bunch more money next year, then he may get to absorb that additional amount. So remember those other expenses. So we had depreciation of $2,461. We had utilities. So total utilities were, what's it say, 1,500. So that's 1,500 times 50%. So 750. And then we had insurance, whoops, if I can spell, which was 1,700, again, by the same business percentage times 50%. So what is that? Why am I doing this? 750, 950, no, 850 for insurance expense. And then we had repairs, which were 2,000 times 50%, so $1,000. So in total, we had, let's see, 1, 11, 6, 11, 12, 20, so for 5,061 in expenses, but we can only take 1,500 to get us down to zero. The additional amount is going to get carried over. So what we took this year minus what we're taking this next year, so 61, 35, 61, that gets carried forward to next year. Or to future years if we have, if we don't have it next year. So there is also a simplified option for the home office deduction, which is just simply a $5 per square foot. I think it's up to, what's our limitation on here? I can't remember off the top of my head what our limitation is. Is it on here? No. It'll be up here somewhere. I can't remember off the top of my head. Simplified, there is a simplified option for the home office deduction, just a flat amount per square foot of office space, but it's limited to a certain amount of office space. So I think I can't remember what the limitation is off the top of my head. Hopefully they've got it up here. All right, so this is what the form looks like, the 8829. So you can see up here, the first thing you do is figure out what your business percentage is. Take your total square, or your business square footage, and then your total square footage, and you find the portion of that business square footage to the total. Okay. Usually it's not an easy 50% because you'll get some odd number of square footage for your home, like 2,847 square feet, and your business portion is 349 square feet. So it would be some odd percentage, but this is just kind of a simplified example. Next thing is we're going to figure out the allowable deduction. First thing you've got to do is enter the amount. It is line 29. So enter the amount from Schedule C, line 29, Schedule C. So that is our tentative profit, plus any gain derived from business use of your home. Don't worry about that part. Just enter the amount from Schedule C, line 29. Just pop there, so 7,000. And then this first section is for those expenses that are also deductible other places on the return, the Schedule A. So what you would do, like he's taking half of his mortgage interest here, half of his property taxes here. On the Schedule A, if he's itemizing, he's going to take the other half. He's going to deduct the other half. He's not going to deduct all of it, because that'd be double dipping, but he's going to deduct the other half on the Schedule A, as long as he's itemizing. Maybe he's not itemizing, and he wouldn't get any of that as a deduction, except that he's got the home office deduction. All right, so these are indirect expenses, so deductible mortgage interest, real estate taxes, total that up, multiply line 12 by line 7. Line 7 is our percentage. That gives us our deduction, which is what we figured out here. Subtract line 14 from line 8. If 0 or less, enter 0. So line 15 here, that's our 1,500 that we came up with. Okay. Then we have listed separately those expenses that are not otherwise deductible, right? Things like the insurance, like the repairs, the utilities, all those things that, except for having the home office deduction, he would not be able to deduct those anywhere else on the tax return, right? So we list those out and total them up. So we add them up. Lines 16 through 22 was 5,200. Multiply that by the percentage, 50%. Now you see they've got depreciation entered separately. That's also on another line on this form. So this is, so add line 23 column A here, let's see. Oh, sorry, column A is over here. And line 24 and line 25. We don't, so this is where you would carry over any prior year operating expenses. So actually the depreciation would be listed separately. So these would be carried over, or the portion of operating expenses that would, if it was last year, that would be carried over this year. If there was any, we'd be listing it there. Total all that up, line 26, allowable operating expenses. Enter the smaller of 2,600 or 1,500. This is where that limitation comes in. Okay, smaller of those two is 1,500. Then we enter the depreciation. So that 2461 gets its own line there on the 8829. That's entered on 30 and 32. And then line 34, add lines 14, 27, and 33. 14 is our total total of the home office expenses for mortgage interest and property taxes. Line 20, where is it? 27 is the 1,500, that limitation. And line 33, which we have nothing on line 33. So a total of $7,000. Allowable expenses for business use of your home is $7,000. Well, look, that's our tentative profit is $7,000. So that's the most we can take is that $7,000. Here's where the depreciation gets entered for the business use of home. And then the carryover amount. So we get to carry over the depreciation, and we get to carry over the other additional expenses. So those two together should be 3561. I've got them combined here, but on the form it's just, they're separated out. So the standard, okay, so for a maximum of 300 square feet. So the simplified method can be used, which is just a flat $5 per square foot. So you don't have to do you don't have to do your interest, your property tax, all of this stuff. You still have to figure out the business use, but you have a maximum of 300 square feet that you can use. So as you can see in this example, he has 750 square feet of business use. He probably wants to go ahead and use the actual expenses because he's going to get a bigger deduction, right? But he could just use the $5 per square foot up to a maximum of 300 square feet. So that would limit his deduction to $1,500 if he did that. Again, take the mortgage interest and real estate taxes. So if you use the standardized, this standard simplified method, you use a per square foot, use it per square foot times up to 300 square feet, $5 per square foot, up to 300 square feet. You would then take all of the mortgage interest and property taxes on the Schedule A. You'd get to take 100% of that on the Schedule A because you didn't take it on the 8829, and you do not take any depreciation deduction. Okay? That's the home office deduction. Questions? How that works? Okay? All right.